When the economy takes a turn, most investors panic. But in multifamily real estate, the story can be very different. In this video, we're tackling one of the biggest questions new investors ask: what happens if the market crashes? We'll break down how multifamily has performed in past downturns, the strategies that protect investor capital, and the steps we take to weather any storm. Is multifamily still safe if the market crashes? It's really a difference between the public equity market and the private equity market. In the public equity market, if the market crashes, things can turn on a dime. In the multifamily space, not so much. Multifamily specifically has performed well during past times of economic uncertainty because of the local tenant base. We primarily target properties that are in a B-class workforce housing demographic, which is a good demographic to cater to because during times of economic uncertainty, you may have A-class renters moving down into the B-class workforce housing demographic. And during times of economic expansion, we may have C-class renters, for example, trading up to more of a B-class type asset. So we specifically like multifamily workforce housing as a particular demographic because it largely is a hedge against or helps us to risk adjust that times of economic uncertainty in the marketplace. Local market selection is incredibly important. Is that market a market that we're seeing a higher amount of population growth, or is it a market that's seeing slower growth? So we look at things like, are there other employers moving into those areas? Are those employers hiring? Are retailers building new retail strip malls, for example? So there's a number of different factors that prudent operators can look at to determine whether or not the particular market that they're looking to make an acquisition in is a market that is solid enough, strong enough, so that they can be ultimately more confident in their approach to the investment and ultimately maximizing investor returns. Multifamily tends to be a lot more resilient against other asset classes. Just for example, if you take office experienced a lot of headwinds during the COVID era. So I think the prudent approach for investors is to look to diversify perhaps over other different asset classes. But the asset class that we specifically have found to be the most resilient is that workforce housing demographic in the multifamily space. During times of economic uncertainty, vertical integration is paramount. Having the ability to effectively control the timeline from acquisition all the way through disposition is an incredibly important risk-adjusted strategy for any investor to look at. It's a lot easier when you have your property management, your building construction, your building maintenance, all in-house as an operator. It allows you to check your KPIs monthly and to really operate the investment with your head on a swivel. During times of economic uncertainty, the operator may need to pivot as it relates to their local tenant base. For example, when it comes to renewing leases, an operator might need to provide concessions of anywhere from 4 weeks to 8 weeks to drive traffic and increase occupancy at that particular property. These are all natural things that happen during the course of any business plan. There's going to be times during the course of the business plan where it makes sense for the operator to provide new residents with incentives to move into those units. However, supply and absorption in any market will help drive down concessions. So the question then becomes is, in the next 2 to 3 years, do we see any new development projects projected to come online? If we don't, that's a clear indication that we're going to start to see concessions start to decrease because of simply supply and demand economics. Oftentimes we talk about stress testing the deal, and that's really looking at things like, could we project or predict what would happen to the investment if cap rates in that market expanded by 50 basis points, if interest rates stayed higher for longer, if occupancy started to maybe deteriorate over the course of that investment hold period. So there are a number of different factors that investors can look at to properly stress test the financials to basically paint this picture of what if case scenarios. There are a number of different levers to pull within the underwriting model to determine whether or not you're comfortable with that specific investment and how the investment was underwritten. Operators must operate the business plan with contingencies in mind. There are things like insurance costs and taxes and inflationary pressures that impact supply and labor. Does the operator have enough built-in reserves in the unlikely event that they need to leverage those dollars in order to continue to operate and effectuate their ultimate business plan? It's incredibly important for operators during times of economic uncertainty to make sure that their investors are fully aware and that the operator is fully transparent with investors over the course of that uncertain time in that investment hold period. Investors need to know where are the KPIs, where are the challenges, both from an operations perspective as well as from a financial perspective at that specific property. And it's important for the operator to communicate with their investors with full transparency in order to continue to maintain trust with their investors. The great thing about investing in multifamily, if you zoom the lens out far enough, it typically will go up and to the right over time. Multifamily is not a risk-free investment. There's going to be times during the economic cycle where there's going to be downturns, where valuations are going to decline. The time to panic is not when valuations start to decline, but really have your eyes on the horizon and see what is out in the future from an economic recovery perspective. If the operator can hold the asset for long enough, the asset itself will be worth more in the future. It's just a matter of giving that investment more time. Thanks so much for joining us. If you'd like to learn more about investing with Rise48 Equity, please reach out to us at rise48equity.com and schedule a call.